43 million borrowers have about $1.5 trillion in federal student loan debt.
My name is Samer Hassan. I'm 28 years old and I currently have $22,000 in student debt. By the time I graduate university, that will be $80,000. This is going to turn into an $800 bill every month. That's a car note. That's a home mortgage.
My name is Michael. I'm 27. I live in New York and I'm a public servant. I'm about $134,000 in debt.
Hi, my name is Allie Truitt. I have around $56,000 in student loan debt.
My name is Kylan. I am 23 years old and I currently owe $90,000 in student loans.
Hi, my name is Elizabeth, and as of today I owe $108,137.48 in student loans. It prevents me from a lot of things, getting a dog, buying a house.
So negatively affected my credit that I'm unable to buy a home for my family, and unable to find an affordable car, payments, anything. I can't get a decent loan. I can't get a decent credit card. I was turned down for rentals recently. This student loan crisis is getting out of control, and the way it's taking advantage of people and crippling my generation is unfair, and things need to change.
And how you doing?
Student loans and how they impact clients looking to purchase houses or do refinances is definitely a very important topic that people that went to school or graduated may or may not think about when it comes to purchasing a home and how it affects them.
Right, and as you saw the intro, guys, a lot of students come out into the world with a lot of debt. And you could see the focus. This was actually an interview on CNBC and CNBC and the CNN that they're worried about their payments. So I brought Dehan Johnson from 0 Point Mortgage to talk about this because he knows this like the back of his hand.
That's right. We're going to keep this high level, short, sweet, to the point, but also fun. So anyone that is pursuing a degree or has in the past, I definitely commend you. It's a major overtaking. It's a huge milestone in your life. At the same time, the world we live in is very systematic, and it isn't always designed to prepare you for acquiring true wealth. And I believe it's important that you understand what are going to be the effects and implications of you acquiring that degree or just going to school and taking out student loans. So we're going to really break this down, Vic. I'm going to have you pull up your whiteboard if you don't mind. We're going to talk about FHA financing and conventional financing. All right?
You keep talking. Let me bring this up real quick.
Absolutely.
And then we'll get busy. So let me close this out. I was checking the Facebook to make sure it was working.
Yep.
Bring this up. All right, so we got it here, and we're gonna go through this real quick.
Perfect. The majority
we're not
of people
gonna mess around here, so.
Yep. The majority of people that look to acquire a home, they go into a couple of different options: FHA, conventional, and VA. The most frequent is FHA. It's a government-based loan, allows you to have a lower credit score and still get qualified for a home loan. And with an FHA, no matter what your total student loan balance is, FHA is going to hit you with a 1% calculation of your full student loan balance.
So you're talking about this 1% of the total balance, right?
Of the total balance.
Okay.
So you might be in a deferment, meaning you're not paying anything. It's zero on your credit report. You might be in a forbearance where you're paying nothing you might be on an income-driven payment plan, okay? Regardless of what you are paying or aren't paying, when you look to acquire a loan, the bank is going to calculate a payment for you, okay? And the way that FHA calculates it is 1% of your total, so the total student loan. Sorry about that. All right, so let's say you were working towards your undergrad, you got your bachelor's degree, and after everything is said and done, you took out a total of $50,000 worth of student loans, all right? If you're paying zero because you're on a deferment or forbearance, or maybe you've calculated a payment and all you're paying is $100, they are going to take 1% of $50,000, which is going to automatically give you a $500 monthly payment. All right.
So that's going to be like debt to income ratio.
That's right.
Is that correct?
That's right. So you can pretty much say you just bought a brand new Benz.
Gotcha.
Yeah, you're driving around in Sally Mae or the U.S. Department of Education.
So let me ask you this question. So because they have a 1% of the loan amount of their student loans, say if it's $50,000, that's $500 towards their debt plus whatever debt they have on top of it. So it's going to limit their qualification as far as purchase price, correct?
Absolutely. So in my Facebook post, we want to talk about 3 key bullet points. The impact, number 1, is to your credit. You want to make sure that whatever arrangements you have with Sallie Mae, the U.S. Department of Education, or Navient, or whoever your servicer might be, Fed Loan Services, stay within that agreement, or always make your payment on time if you're required to make payments. If you stay within your terms, it will help your credit to grow. If you fall out of the graces of whatever the arranged payment is, and you're not making your payment, or you're out of your forbearance period, out of your deferment, it is going to be the same thing as you missing a car payment, a mortgage payment, a credit card payment. It's going to drive your credit score down.
Okay.
Right.
Just real quick on the news on the Facebook feed, we have a couple questions. We're going to answer all your questions here. Let us run through this real quick, and then we'll start answering questions.
Absolutely. Second thing it's going to impact is going to be your affordability. So Vic, you hit on a very important component. That is what type of a home purchase price you qualify for. So if you're making, let's call it $3,500 a month net, okay? And you have a payment of $500 for your student loan. You want to make sure that you look at how much your home is going to cost you. Because if you have other expenses like a car payment or credit cards or any other installments that are showing up on your credit report, that will impact your ability to afford your house from the perspective of the bank.
Gotcha.
All right.
So going into this, you already have to assume that you have 1% of your loan, no matter what, for FHA only. If you're getting
right. For FHA, don't even assume, just know it's coming.
Okay, so know if you're 1% hit off your loan balance.
It is inevitable. So prior to you begin this process, I think proper preparation prevents poor performance. Always remember your 5 Ps. If you have student loans, contact your servicer. They may have split up all your loans into several small loans. You want to get your total balance of all your loans and calculate a 1% payment. And most likely that is going to be the debt that you are responsible for when it comes to you qualifying for a home.
Wow. Okay. Yep. All right. Where are we going next?
Next, we're going to conventional. So conventional is a little bit different. And if you can, you may want to get into this space if you are in higher education. Those people that have multiple bachelor's degrees, if you have master's degrees, if you have a doctorate, this is going to be an area where conventional is really going to be your saving grace. Conventional, while it does require a higher credit score, at least a 620 in most cases, they are only going to take a 0.5% of the calculation versus the 1%. So the same loan of 50K is going to be a $250 payment versus a $500 payment.
Wow. Okay.
Yep, and believe it or not, guys, $250 a month can make up of anywhere between, you know, 30 up to $100,000 more in purchasing price. It's huge.
Okay. So is there a way that they can, like, if somebody has student loans, to make it a conventional loan instead? Or you're talking about conventional financing, right? That's what you're talking about? Okay.
Yes, if you have student loans, all right, the hack is you want to work on your credit and ensure you're at least at a 620 or higher.
Gotcha.
If you are below a 620, you are automatically going to be disqualified for conventional financing.
Ooh.
And FHA is going to hit you for 1% of your total student loan balance.
Gotcha. Okay.
Okay.
Okay. So before we go here, I got some questions for you real quick, man, from the feed.
Of course.
Here, Jesus is now the time to buy. You know what, man? I always tell my clients is the time to buy a house is when you're ready to move. Okay.
Yeah, great answer. I mean, Jesus, appreciate your question and thank you for joining. The time is when you feel you're ready.
Yep.
And the best time is really talking with the lender and presenting the full picture. You might think that you're ready, but until you have gathered the 6 pieces of documents that you need, your license, your W-2s, your taxes, your pay stubs, your bank statements, your assets, and you've pulled your credit, and we have an idea of what you want your monthly payment to be, until all those things are put together, whether the time is now is kind of up to you.
Right. And you know what, Jesus, if you're looking to buy, it's going to depend on the area too, man. Chandler, Gilbert are hot areas, Levine's being hot, so it just depends on where you want to live. Next question. Ms. Harvey, Samara Harvey, does FHA loan percentage change for credit card debt versus student loans?
Can you repeat the question? First of all, what's up, Samara? How you and Jay doing?
Welcome
give me that question one more time.
Does FHA loan percentage change for credit card debt versus student loans?
Loan percentage change. Can you clarify that question for me? So are you saying how much you can purchase or the percentage that they are going to take for the debt? I think that's what she's asking.
I think that's exactly what she's asking, because she mentioned FHA loan percentage change for credit card debt versus student loans.
Okay. So credit card debts are going to be very straightforward. So if you have a credit card with a limit of $2,000 and your balance is $1,000, your creditor is going to have a minimum monthly payment listed on your credit report. So if your minimum monthly payment is $75 and that's what shows up on your credit report, that will become a line item of the liabilities. Whatever your new mortgage is, which includes your principal, interest, taxes, hazard insurance, mortgage insurance, if you have it, and HOA, that payment and whatever liabilities that you have on your credit report, your monthly car payment, your monthly credit cards that are minimums, that will factor into your debt. The trick is with student loans, it might not be apples to apples. Your credit report might say 0. You have a debt for 25 grand, you're in deferment, or maybe you're in a income-driven repayment program and you're only paying $25. But if your debt is $25,000, while it's showing $25 on your credit report, the lender is going to hit you with the 1% of $25,000, and that will be a payment of $250. I hope that answered your question, Smart.
Right. I got a question for you.
Yeah.
Now, if I come out of school with $50,000 a loan, and obviously, you know, Sallie Mae, they have you have like 6, 7, 8, 10 loans, right?
Yep.
Is it wise to maybe refinance everything into like a blended interest rate and then go shopping for a house? Would that probably decrease your debt to income ratio?
That is a phenomenal point. So if
I like math, just trying to make it simple, you know what I mean?
and again, proper preparation prevents poor performance. So if you're someone that has 5, 6, 7, 8, 9 different loans on your credit report, in your mind, you're thinking it's just one loan. But sometimes the servicers breaks them out and itemizes them into many different loans, and it changes your interest and your total balance of student loans. The first step is contacting your servicer and seeing if there is any option of you doing a consolidation of those loans for a longer term. Let's put this in a perspective that most will understand. Vic, if you and I both go to the same car dealership, we're looking for the exact same vehicle, Toyota Camry 2019, the car's for 30 grand. If you bought that car for 30 grand and your term was for 12 months and my term was for 72 months, your payment is going to be much higher than my payment's going to be. Right. So the longer that my term is, the less that I'm responsible for on a monthly basis. And if you're someone that has a lot of student debt, it might be in your best interest to look at what is the current term on your student loans. Is it 10 years? Is it 15? Is it 25, 30? You want to look at how long you can stretch it out if you're very, very motivated to purchase a house, because that will drive down the calculation of your monthly requirement. Great point.
And then I have a question for you. The other thing too is it's happened to me like 3 years ago. A buyer came up to me and said, I have student loan debt. They had a great credit score. They were able to purchase a house. The problem is that they missed one payment.
Yep.
So is it still true that if you miss one payment on your student loan history, you can kiss it goodbye for an entire year of buying a house? Because it's
sometimes. It really depends on where your credit is at.
Okay.
There are some sweet spots in your credit where you were at a 625 when you researched it through Experian or Credit Karma or your credit card before you pulled. And then the mortgage company pulls your credit and now you're at 619. Well, now you're below a 620. You're not going to be able to qualify for conventional financing until you get over a 620. Okay. The other avenue is getting a good faith letter from your servicer or the U.S. Department of Education. This is a longer process, but it can be done. Letting them know, hey, I'm looking to buy a house for me and my family. I missed one payment. I've had a loan with you for 15 years, and one payment is preventing me from getting the financing. Most of these servicers will work with you. It might take some time, might take some phone calls, but if you work with a good lender, we can help you make those phone calls.
There's the pitch, jab, jab, right hook, and the good realtor too.
That's right.
We're just bringing the content for you for free. That's how we do it here. Just bringing it.
Absolutely. Well, one other point I wanted to bring up, Vic, that you brought to my attention before as well, is having clients that have not paid on their student loan. I mean, life comes at us fast, and sometimes paying for your student loan isn't the priority over your transportation or your rent or your electric and your phone bills. We get it. We've all had to prioritize our priorities. If you have not made your student loan payment or you've fallen out of your deferment, you may want to reach out to your student loan servicers before pulling your credit to buy a house. Because if the loan servicer or the Department of Education has put you in a default on your student loans, you are going to be unable to get approved no matter what bank you go to. Until you get out of default or into a repayment or a loan consolidation, you will not be able to get approved for your financing. So that is not information that you want to hide from your lender, because you can go through a long process and end up being very disappointed.
Wow. So how long is it going to take for them to get out of default? So let's just say I go into default, right? So I have to catch up, say $3,000. I catch it up. Now I'm on a repayment plan starting, say, today. Okay. June the 20th. How long do I have to wait now till I talk to you, my lender, to be like, hey, now I'm on a repayment plan. I'm not in default. How long do I have to wait till I can buy a house now? Because I know that's kind of a question as getting
Right.
out of default and ready to buy a house? How long do I have to wait for you to send me that prequal to go ahead and purchase a home?
Yeah, I always set the expectation of my clients, be prepared for 60 to 90 days,
Okay.
because it takes a application process online or directly with the Department of Education or your loan servicer to apply for a consolidation of your loans to get back into repayment. And unfortunately, the government is not the fastest working entity. So they take time to process your application and to report to the credit bureau that you are out of a default. So this isn't a microwave process. This is like baking that lasagna from scratch. If you're going to do it, you got to do it the right way.
Right. And we all go through some issues, financially in our life. And not only that, you have to do the repayment plan, right? You have to get out of default. Well, you're talking about putting cash right there. Don't forget that you're still going to need some money to buy a house as well. So if you do have student loans debt, reach out to Dehan Johnson at 0 Point Mortgage, and he can kind of coach you what to do before you, do anything financially, because you're definitely going to need some cash up front to buy a house no matter what. No matter what anybody tells you, you need money for a home inspection, you need money for payment. So.
Right. There's not many banks. There's not many banks in business giving away $250,000 in home loans for nothing. They're in business to make money.
Right. And if you missed that golden nugget right there, I suggest you go back and you watch the replay, because what that gem he just dropped right now, that's gonna save you a lot of time, effort, and money. What other gems you got for us, my man? Let me see if I have any questions.
One thing is that if you are in the, I'd say, very accomplished category where you've acquired your doctor's degree. I know there isn't a lot of doctors out there, but there are doctors out there, very accomplished. If you've acquired your doctorate, your PhD, whatever field it is, there are many lenders out there, including myself, that have 100% loan forgiveness for your student loans. So regardless of what your student loan is.
Did you say 100%?
100%.
Wait, did you just say 100%?
That's right. So
wow.
Okay. If you are a doctor, or if your friend, family member, or coworker is a doctor looking to acquire a loan, and you have 6 figures worth of student loans, which is not uncommon, I would suggest you speak with a lender that has programs that will give you loan forgiveness, because they are out there.
Yeah, and some people don't have a doctor's degree and they have 6 figures of loans. That's what kills me the most.
That's right.
So what else you got? Because now I got something I want to share too.
Okay. I think I'm good. At the end of the day, if you have student loans, you're thinking about buying a house, number one, you want to understand what kind of an impact it's going to have to your credit. Have you been paying as agreed? Are you in default? Are you making your current payment? Are you in forbearance? Or have you been ignoring it? Okay. That will have an impact, whether negative or positive. Second, depending on where your credit is at, how is the calculation of your full balance going to impact what monthly payment the bank's going to say you're responsible for? 1% if it's FHA, 0.5% if it is conventional. All right. And then last but not least, take a look at what your affordability matrix is. Where do you want your monthly payment to be? And based on that, how much of a home can you purchase? Once you decide that, get with me, get with Vic, get with your lender or your realtor of choice, and they should be able to calculate exactly where you want to be as far as your loan amount and what options you have in the market.
Yeah, you see, a lot of my clients that's the one question I ask is like, what is the monthly payment you want to be at?
Yep.
They keep on telling me, well, I want to buy a $350,000 house. And I say, well, what is the payment you want to be at? Because if you want to be at a $1,600 or $1,800 payment, you're not going to be able to buy a $350,000 house.
Absolutely. I mean, that's a gem that anyone watching live or that's watching this later, before you begin searching for homes and putting a price tag on what you're willing to spend for the total purchase price, look at what is my desired monthly payment out the door based on what I'm currently earning now? And what is the most that I'm willing to spend if I find my dream home? If it crosses off all the boxes for me, what's the most I'm willing to spend? That monthly payment will determine what house is going to show you.
That's right. So I just want to drop one quick gem for you guys right here. That what I think, I was never taught this, right? I got my associate's degree and I framed houses to pay for my associate's degree. Okay, then I moved to Arizona and I got my corporation to pay for my bachelor's degree. So that's how I came out with zero to actually, no money as far as student loans. I think the max student loans I had was like $12,000.
Wow.
Okay. So, and that was back in like 1999. I'm just putting my age out there for the public. Okay. So this is a gem that I would suggest for the young people who are going to school. Okay. Something you should think about is when you get out of school, you most definitely should buy a house. Okay. I think everybody should buy a house. And the reason why I say that, especially if you're single, what you do is put some roommates in there. 3-bed, 2-bath. Okay, put some roommates. And why do I say that? Is because then it lowers your payment to what you have to pay out of your pocket. So what do you do with the money that's coming in from your roommates? Tell me, what do you think we're going to do with that money?
Pay that student loan down.
There you go. Take that student loan down.
That's right.
You're not on the hook for the debt. Okay.
That's right.
And now you're probably thinking, well, Dejan just said, well, I'm not going to be able to qualify because of the numbers up above, right? You got 1% of the loan for FHA and 0.5% for the other loan. Well, can we do a cosigner, do you think?
Absolutely.
Okay. There you go, guys. We're solving your problem with a cosigner. And who's going to be that cosigner? Probably your mom and your dad. But this is a strategy to help you get out of the debt for your loan faster than forever. And I'm telling you guys, this is probably the best plan to do. And then after 2 years, you could sell this property. Okay. You sell it, you take the profit, you redo it again. You just keep on doing it and doing it and doing it until you buy your dream home. That's for the young people. That's just a little tip. What do you think, man? What do you think?
I was sold at doing it and doing it and doing it well. You remind me of LL Cool J right there.
All right. Cool. So let me see if we have any other questions here. If not, we'll just wrap this up.
Okay.
Margarita said, I learned the hard way too. We all did, my friend.
Yep.
Is there any other questions on the feed? If not, we're going to wrap this up. We're pretty much a done deal here. We are just bringing the heat. So
that's right. I don't see any, but again, Vic, I appreciate you, and I hope we brought some value to everyone out there.
Yeah, and don't forget to reach out to Dejan Johnson, 0 Point Mortgage, Victor Huerta, freeagentproperties.com. You can put that in Google and YouTube. Over 133 videos. I'm just dropping the bombs right now. 133 free videos on YouTube. I mean, you could get a PhD and not have to pay $50,000 in loan debt.
That's right.
I'm just telling it right there like it is. But hey, I appreciate you, my man, for taking the time and explaining all this. I think there's going to be some more questions on the replay, so I appreciate it if you just watch the feed for a couple hours, or maybe tomorrow, and then we'll just drop some more gems. And don't forget to, we're going to be doing this on a weekly basis.
That's right. Appreciate you guys. Have a good night. Contact Vic, contact me, and appreciate you.
Good night, guys. Bye.
All right.